show where we go through the stock markets, talk about economics, companies, corporate news, earnings reports, pretty much anything on our mind from a chart perspective as well. Break it all down from an analysis side of it and give you guys some insight as to what we're seeing in the markets today. I had a big sell-off on Wednesday. We were talking about that yesterday during the live show. Kind of a doji day, a little bit of a reprieve day happening here today. Not much of a bounce yet. We'll break all the action down. We've had corporate earnings in the last 24 hours that are grabbing my attention. Pinterest, Shopify, Visa, a couple other major notes. We will review all of that. And then we've got earnings preview here tonight. I mean, the big four of the biggest companies in the world, Apple, Google, Amazon, and Facebook, do report after the bell. We'll talk a little bit about that. But just generally, here to have some fun, break down the markets, and be around our team out there. Hashtag Team Tackle in the chat if you're joining our channel right now. And if you're brand new, click subscribe, click the bell. Come back and join us daily. Let's start with Matt. How you doing today, sir?
Yeah, Tim, I'm doing good. Excited to be here with the crew to break down the activity. And I think like a lot of people in our world, the simple reality is we got a lot of news happening on a daily basis. And sometimes we wake up and we're like, why is the market not moving a little bit? I think obviously, I mean, given the fact that just today, just think about it like this. Over the last week and a half, we've had very positive earnings. In fact, I would put this earnings up in terms of beats on EPS versus revenue up there with some of the better earnings seasons over the course of the last decade. We've had quite a bit of merger and acquisition, conversations over the last couple of weeks that are typically fairly bullish in nature. M&A activity is typically a fairly bullish indicator. Yesterday with the news on Xilinx and AMD and Nvidia before that. In the semiconductor space here today, you have Marvel acquiring IPHI in a split stock cash deal for $10 billion. Today, GDP report, we'll talk about it here in a little bit. And obviously, when you're down 31% and you go up 33%, you're still down overall. But at least it's a headline grabbing number, right? And beat the expectation. The expectation was 32%. Advanced GDP data came in at 33.1%, a positive number, no doubt about that. And yet, crickets in the marketplace. Nothing. Where's the buy?
I'm waiting for the crickets right now. I'm with you though. It's silent. There's not much there. It does feel just like, okay, what's going on? It's like, you dropped something from the top of your roof, Matt, and it goes boom. And then you're just watching the dust kind of float back down. There's not a lot of action here after that big drop yesterday. And I think that's where my head is, kind of wondering, what is going on here? Because you had positive economic data today, like you talked about. You've had positive earnings reports. Is this market just so laser focused on Tuesday that nothing between now and then?
I think so. Now, obviously, that faith is going to be tested here tonight. I mean, you got, Facebook, Apple, Google, Amazon all reporting tonight. And by the way, that might not, those four companies might not be the four companies, the one company I'm looking at most tonight. I'm actually fairly anticipating Activision's report here tonight, but the big four headline names, Apple, Facebook, Google, Amazon, all report tonight. And all four of those in a singular nature have the ability to really grab the market's attention and drive the market, up or down. But right now, after, what happened to Microsoft and, what we've seen with the muted response to the GDP data today and what we've seen with the muted response to this, to the M&A activity overall. And, outside of some, particular spaces like social media, Pinterest Snapchat last week, Pinterest today. And we'll take a look at Pinterest here in just a second. This market just doesn't want, it's not that it doesn't want to move, it doesn't want to buy. And that's what I'm saying. Where's the buyers out there based on this data? And it's all crickets. I think that is telling here today that, after the run up in the market we've had post-pandemic, really ever since April and May of this year, it's been even given the last month and a half, we're near the lows of the last month and a half, but overall, you've had a very impressive, rebound from the market post-COVID. And, I think you're just right now so tight in front of a major election that the market is just simply saying, we just want time to pass here. We don't really care what happens today or tomorrow. What we care about is what happens next Tuesday. And once we start removing some of these uncertainties from the market, then we'll start to price in where we think the market's going to go in the future. And, it does go without saying that, the GDP report is a backward looking report, and, other economic reports are more forward looking. And some of those forward looking economic reports are a little concerning right now, especially in the labor market, especially in some of those manufacturing reports, like the ISM manufacturing. But overall, the data we've gotten has been fairly positive. It's the market's response has not been positive, and that does tell me that either one, the market is questioning the fundamental belief in the market, which I do not believe as of right now, even though I personally question the fundamental value of the market. I don't believe the market is questioning that at this point. I think we're just honestly so tight in front of an election that the market is saying, okay, we're going to wait. We're going to let that, let that come, let that pass. Then we'll start projecting.
Mark, when you popped by my house yesterday, just for a minute to pick up your daughters, you were talking about, and you asked me a question, what do you think the market's going to do tomorrow? What do you think the market's going to do this next couple of days? And you were painting out some scenarios based on what Matt's talking about here. I think you guys are pretty closely aligned. What's your anticipation right now? We've got big tech earnings tonight. I want to go through the GDP numbers. I want to go through all the data here today. But just in general, before we get into the detail here, what's your read here on the broad market conditions? You had a big sell-off yesterday, a little doji here today, and the ES, by the way, is even better than the Dow. That's a little uglier, but not much of a market response. Where's your head at, sir?
I mean, all you can do, and this is a weird environment, right? Because there's so many different ways. And like we were talking yesterday, there were a couple scenarios that wouldn't surprise me. One is essentially a doji, this is what I was telling you yesterday, dojiing into the election, right? Where I mean, I know me. I mean, I'm not doing anything today. I'm not doing anything bearish. I'm not doing anything bullish. I'm letting my existing positions that I've planned out, and I'm probably not going to do anything the next couple of days either. And I think a lot of people fall under that category. So I think you could have a couple scenarios. One, it doji up a little bit, down a little bit, heading into the election. I wouldn't be surprised if there's one more spin out day. Just because of the lack of technical support, any catalyst, anything that comes along, you could break that support. I mean, we're seeing that with oil. We'll talk about that later on. But so it wouldn't be surprised to see one more spin out day with, so what we got Thursday, Friday, Saturday, Thursday, Friday, Monday, Tuesday. One spin out day, 3 doji days, down another couple percent, but all relatively basically taking it off till the election. That's what I have as the highest probability scenario right now.
So much of that's going to depend on tech earnings tonight, though. And obviously, we've been talking about the market responses to earnings. Matt, you did make one very important note, though, is that we have had areas of the market that have responded positively. We'll look at Pinterest later today. But Facebook is one of those companies tonight. I mean, Mark, are you certain that the market's not going to respond favorably to these tech earnings? I mean, could we get a bounce day out of it?
Right? We don't, in trading, you don't deal with certainty, right? You deal with probabilities, you deal with technicals, you do with your read of best probability. So, could you get a lift day tomorrow off earnings? It's Google, Facebook, Apple, and Amazon. They represent like a quarter of the whole freaking market.
46% of the NASDAQ 100.
Yeah, and like half of the Qs. So people have joked this year. It's the S&P 5. So, you're dealing with all of those companies. And so it is the market reporting earnings tonight for all intents and purposes. So,
Matt, what are you looking forward to tonight? You mentioned Activision, Facebook here. We're looking at here. Obviously, we know what the market maker implications are in a lot of these companies, 4 or 5%. Do you think the market's going to approach these 4 different than the theme that you've been identifying? Or are you just going to have your popcorn ready and kind of watch it like the rest of us are? What are you looking forward to tonight the most out of I know you said Activision earlier, which would be an important one. But what about like Facebook, Google, Apple, Amazon?
In looking at specifically Apple and Amazon, I think it's going to be tough in this environment for Apple and Amazon to really overwhelm the market and just get the market to just discount everything else and just be laser focused on Apple and Amazon here. And that's more based on what the market did with Microsoft. I mean, Microsoft, when you're looking at Microsoft here, and let's just take a quick peek at Microsoft. When you're looking at Microsoft here on the earnings announcement, and again, this just a couple days ago, but Microsoft's earnings were good. They were good. Beat on EPS, good beat on EPS, good beat on revenue. Nothing was really bad in the underlying conditions of their earnings report either. So, and what the market do? The market did not budge on the actual numbers, did not budge. And we talked about this 2 days ago, but on the overnight action between the hour between when they made the report versus when the conference call was, the market didn't do anything. It started selling on the actual conference call, and then obviously there was some follow through on the cash open on Microsoft as well. When you're looking at Apple's reports, right now you're obviously looking at this and saying, oh man, Apple just released an iPhone. This is very popular, very important. Well, yeah, these are all things we know about Apple. We know they're going to make billions and billions of dollars. Does the market have the appetite for Apple right now? Does it have the appetite for Amazon right now? And based on what we saw in Microsoft, and based on what we've seen with the collection of data in earnings have been positive. There is no argument there. Earnings have been positive, but the market has not been buying them up. And so the one space though that you can look at and say, well, yeah, you're right, Matt. The market discounted Microsoft's earnings. It discounted the bank's earnings. It discounted, some of these other positive earnings we've seen in the marketplace. But what did it not discount? Well, the one area of the market it did not discount last week was Snapchat. And if you guys will remember, Snapchat's overall earnings, extremely positive, absolutely destroyed EPS numbers. Revenues were above, the forward guidance was fine, but it was the growth year over year on Snapchat that was really, really impressive. And Snapchat gaps up 25%, goes 30%, and then just runs. And by the way, I know the world's crazy right now, but I kind of like the technical scenario that Snapchat is forming here after the positive movement in their earnings. Nice little base between 40 and 44, clean trigger above 44. I like that from a pure technical perspective. And if you didn't have an election 5 days from now, I'd be like, wow, I might front run that a little bit, especially with Facebook. And the reason I say that is now today, that next company in the social media space to a certain extent, and one, a dirty, sexy money candidate for us at Tackle Trading is Pinterest. And Pinterest, following on Snapchat's earnings from last week, Pinterest comes in at 13 cents a share, 2 cents a share on the expectation. Pinterest comes in at $442.6 million versus the expectation of 356. Revenue, very similar to what we've seen in Snapchat. And I don't anticipate this with Facebook, but revenue comes in at a robust 58.2% year-over-year growth. And when you're talking about a company like Pinterest that off the lows is up close to 500% here, over the course of the last 6-7 months, to see Pinterest go up another 28% off that type of movement. I mean, you gotta see that as the market has it might be the flavor of the month here, guys. It might be that flavor of the month where the market's like, we're going to discount everything out there, but man, social media seems to be rocking and rolling here. Can Facebook, to answer your question, Tim, on the earnings tonight, can Facebook, which I do not expect to see the type of growth in Facebook, obviously, that we saw in Pinterest or in Snapchat, but you do have the market mentality over this right now. And so I do think on specifically Facebook, if there's one of these stocks that have the ability to break the trend tonight, that trend of the market discounting positive earnings, if there's a company specifically tonight to break that trend, it would be Facebook. And a lot of that, though, is based on what we saw in Pinterest. It's based on what we saw in Snapchat. And it's what we've seen in Microsoft with some of the other earnings as well. And so can Facebook have a juggernaut report and give the market a little bit of a sigh of relief, from a technical perspective? I believe so. And so the one I'm looking forward to the most tonight would be Activision for me. But to really understand the market mentality and emotion around earnings season right now, I'm looking at Facebook to see if Facebook can continue the social media dominance that we started seeing with Pinterest and Snapchat. Can they continue it? That's a question I have for tonight. And then specifically, I'm looking at Apple and Amazon specifically in the same vein of thought that we were seeing Microsoft. Are there some pre-planned sales here on Apple and on Apple, Google, and Amazon specifically? Given what we saw on Microsoft, positive numbers, positive result, positive forward projection, market still sells. Did that give the big time investor class, the institutions out there, did that give them a little bit of, wait a second, if we were on the fence about this, maybe we sell here? Do we have some pre-planned sales that are going to be happening on Apple, specifically on Amazon? Now, I'm not saying we're going to see it, but that is a question I have here tonight, is did that Microsoft indicate something bigger to Apple, Amazon specifically, maybe a little bit on Google? Secondary question, probably in my book, one of the more important questions, can Facebook continue that social media trend of outperformance on the market in their growth aspects? I think it's a very, very important earnings night tonight, especially in the short term. Obviously, that goes without saying, but it will give me a little bit of understanding in how the market is handling their risk appetite to a certain extent.
Thank you for the breakdown, by the way, Matt. I do appreciate it. And I'm having a little bit of an issue with my headphone here, so I did miss a short moment of that. One thing about Facebook that if there's one concern I have, if there's only one concern, is it possible that Twitter and Pinterest and all these others are doing well because of, the lack of spending in Facebook? Could they be the outlier within social media, that the other people got a bump because people took their advertising away from Facebook? I mean, and I don't have an answer to that until tonight, obviously, but do you have any thoughts on that? That maybe the other guys are doing great and Facebook will be the outlier, or is that just me overthinking?
No, I don't think you're overthinking that, T. I mean, there was, I can't remember, was it the month of June or the month of July? I can't remember.
Yeah, the boycotts in July.
But it was, but obviously Snapchat last week, there was a little bit of, there was a little bit of analysis of one of the reasons Snapchat was so good was because those marketers that have primarily marketed on Facebook during that month, where we were basically as a society saying no more marketing on Facebook, there was that Facebook boycott. Snapchat benefited from that. Pinterest benefited from that. So does their benefit come at the destruction to a certain extent in the short term on Facebook? Maybe. I think that would be the one concerning point in that analysis, Tim, of can Facebook achieve what we saw with Pinterest and what we saw with Snapchat? Now, don't get me wrong, guys. I don't expect percentage growth out of Facebook like we saw in Snapchat and Pinterest. You're talking about two very, very, very small companies in comparison to Facebook. But yeah, that does throw a little cold water on the analysis. Absolutely. And that does have to be a little bit of a concern, no doubt about that. But I still think the market mentality does have a trend towards social media. I still think there is an edge there. Now, would I buy out of the money call options and hope for a gap up? Of course not. Nobody would do that if you understood how volatility works around earnings. But the reality is, out of these four specifically, those are the questions I have. Can Facebook continue that trend that we've seen in Snapchat and in Pinterest? And does Apple, and specifically Amazon, does that Microsoft reaction have a weigh on Apple and Amazon investors?
Marky, I'm literally getting every third word. These headphones that I've had for like 5 years, they finally have gone out literally right in the halftime show. I'm going to pitch it over to you to kind of lead the discussion for a minute while I get a different.
We could look at Logitech's bullish retracement. I mean, we could do that for you.
You never listen to anything.
What I just heard there is Logitech bullish, and Mark said yes, right? He did said I got this.
He said he likes Logitech.
I said you're a hippie beatnik that should invest in.
He said you're an amazing young man. That's what he said.
I'll be right back. I'm going to find another headset.
All right, so
I do kind of like Logitech's bullish retracement.
I hate the Tim roll. Like, I've had to do the Tim roll a few times in the house.
None of us like the Tim roll.
And I hate the
none
Tim
of us
roll.
do.
He does such a good job at it, though, doesn't he?
Yeah, he does.
He really
Nobody
is.
likes the Tim roll.
He has.
Here's the reason. Here's the reason. Mark, when you or I ask a question, we want to answer our own question. When Tim asked a question, Tim actually cares about what you and I say. So
exactly what it is.
I'm sorry, how to say it.
It's hard to ask a rhetorical question that you want to answer yourself. It's easier just to
let me
answer the
ask
question.
you a very important question that I'm going to spend the next 7 minutes detailing the answer before you have a chance. No, let's just face reality. You and I suck as the host. We're terrible. No, we could just filibuster until Tim gets back.
Well, and here, let me ask a question that I already know my answer to. Do you think it's possible that earnings never matter again? Do you think that this from now on is just a theme market, like whatever the theme is?
No, I don't
earnings
think
will have
so.
their day again.
I honestly think, guys, it is just this quarter. I really do believe that. I believe it's just this quarter. I think there is so much on top of the market right now, weighing down the market mentality, weighing down the market emotion. It lacks a theme. It does. It lacks a theme. You know, it's like my buddy Christian would say, we need to gamify this stuff. It lacks a theme right now.
I mean, 2017.
There's a vacuum.
2017, it was all about global synchronized growth, right? And economic data mattered because the theme mattered. You know, and I guess earnings themes will emerge in the future, but it just seems like in the last 5 years, themes have been what the market cares about. You know, from the PAL pivot in early 2019 to trade wars to COVID to all the themes that have happened over the last 6 months. Man, trade the theme. Like, you know, and earnings, I guess, will have a theme again, right? Like, hey, earnings are awesome, but
these earnings themes change, obviously, or every earnings season. But I do believe if we were not 5 days in front of earnings, guys, I do believe, even with the COVID situation, even with the ongoing stimulus conversations, if it wasn't for next Tuesday being the presidential election, I do believe these companies that have been reporting very positive earnings would have been gobbled up the same way they were last quarter.
Mm-hmm. Yeah, maybe. I'm with you on that. The one thing I will say about the earnings themes, though, and you guys got me back, by the way, and you can hear me.
Yeah,
okay?
You're good, bro. Yep.
Okay. The one thing that I will say about the earnings themes, I'm seeing it in 2020 to where every quarter has a different theme. I don't know if that's what you guys were just talking about.
I'm seeing it too.
I'm seeing and Mark, I can't remember, like the first time it was, they just got bought up, right? Because everything was depressed and they started going, they beat depressed expectations.
It's the Apple impact.
Yeah. Then remember the second earnings season, not actually the third quarter, I should say.
It was front running.
They were front running it and they were running it into the event. And then we would have whatever reaction came from it. But now obviously even on good events, we're not getting them.
Ostrich ducking their hand in the sand.
Yeah. It's been fascinating. And by the way, I know traders hate earnings. I know, like Coach Frankie hates it. A lot of people hate it. But it's so important to trading. Hate it or not, you got to analyze it because these themes can end up dictating price action and movement. I mean, just think about how many charts get blown up one way or the other after an earnings. Pinterest, you looked at Pinterest a few minutes ago. Pinterest developed into a beautiful uptrend after that huge gap out on the last earnings, you know, so it's really critical. Tonight's going to be hugely important, obviously, hugely. I just did say that. Absolutely.
Hugely.
Absolutely.
I like it.
But
absolutely said hugely.
That's right. You look at these trends. I mean, it's like, you know, earnings are critical. Whether you hate them or not, you got to analyze them. So
you have to analyze them. There's no doubt. But, you know, earnings are hated by short-term traders that basically trade based on technical analysis. Mm-hmm. But there's a lot of traders who have systems around earnings that are really, really, really good. And so let's just be clear on who hates earnings. Swing traders don't like earnings. There's a lot of other traders that actually enjoy earnings.
Yeah, even Coach Tyler did. I'm glad you clarified that because Coach Tyler did an event last night talking about how he does trade the earnings. So
yeah,
there are segments that do like them.
Yep. I don't enjoy trading earnings. I feel like, and for me, I just feel like I can get an edge on a technical perspective. I feel like I can get an edge on a fundamental perspective. I feel like I could get an edge on economic analysis. I feel like I can get an edge on behavioral analysis. I feel like I can get an edge on identifying the themes of the market. I don't feel like I could get an edge on understanding how institutions are actually going to handle earnings.
Yeah. It's right now. I'm with you on that in this year, Matt.
And
I've
I'm
had
just
edges in the
talking me.
past. Yeah.
I'm just talking me. I'm not
Yeah.
talking to other traders out there.
Yeah. And the question, an open question, quite frankly, and I don't have an answer to it yet, is are the themes changing so quickly that those edges are going to have to be identified per
Yeah.
season?
Yeah,
Right?
we've been like swing trading seasonality in the last 6 to 8 months. Every time frame is timed up in post pandemic, but these themes develop, these themes go. Right now, I just and again, can tonight change that theme of earnings not being bought up despite being positive? Yeah, tonight can change that. That's another open question. I think tonight is going to be very telling for the market in the short term.
Yep. Let's do some quick technical analysis on the broad indexes if we can, Matt. I do want to talk about the GDP numbers a little bit more in detail in a minute,
Yeah.
but give me the S&P if you will, and just give me a technical read, daily, intraday, weekly, whatever you're looking at here.
I'll do it fairly quick. We're kind of stuck there in no man's land from a daily perspective. You just clipped the 50-day moving average 3,400. You do have under under support right there at 3,200. That is a minor level of support. Correct me if I'm wrong, Mark. I don't have the 200-day moving average up, but I'm assuming it's around 3,100.
Yeah,
Give or
a
take
little
some
north
change.
of that, roughly.
Yeah, so you have this major zone of support here between 3,100 and 3,200. If you look at that on a weekly chart, you can kind of see where the 50-period weekly moving average is. That doesn't line up directly with the 200 SMA on the daily, but it's pretty close there. So you do have that major area of support there right at that 200-day moving average on the daily. If we ever do see, a dip down into that level, we'll have to assess that as a potential buying opportunity. It was here. I mean, the 200-day moving average is a battle zone, no doubt. A little concerning on the weekly chart, though. You're looking at a little bit of an M formation there, guys. I mean, you might not like looking at it, but you are seeing it.
It's there.
It's there. You can't discount it. And so you do have a little bit of a double top, double bottom scenario on the weekly chart that is a little concerning. And if these buyers don't step back in, I certainly expect 3,200 to eventually get beat and a retest of that 200-day or that 50 SMA on the weekly chart. On an intraday perspective, you're seeing a little bit of slowing momentum after the sell-off. We have, and you are forming consolidation neutrality, which can lead to a double bottom, double top scenario where you're looking at perhaps a little bit of a breakout. But overall, technically, I do think you're a little bit in no man's land right now. And when you're in that environment, it wouldn't surprise me to see a big down day into that 3,150 level. It wouldn't surprise me to see a big up day into the 3,400 level. You literally are in no man's land right now from a technical perspective.
Yeah. In no man's land, by the way, on a very broad range here between that 3,200 all the way up to 3,536. I mean, just the context of that, the last couple of months have been wild if you think about it. Huge sell-off, big rally, now but another big sell-off. But generally that long-term range is still in play and stuck in the middle right now. Give me the NASDAQ if you can, mostly because I want you to look at the intraday because we did stick to double pivots. Do you see anything in terms of momentum changing here, Matt? A little bit better relative strength in the NASDAQ?
You are. In looking at the NASDAQ, you do have a little bit of a bigger bullish stance on an intraday perspective. You did see the double bottom at 11,150. You did see a double top in the 11,280 level, and you're fighting for a potential breakout that could see price appreciation in the NASDAQ go up, and good 100, 150 more points on the intraday up into 11,450. So the NASDAQ is leading here from a intraday perspective, and if the NASDAQ continues to move, the S&P is going to double bottom and see that move up to the upside. But you're only talking day trading techniques here, T. I mean, that's it. Like, when I'm looking at the NASDAQ showing a little bit of internal strength against the S&P on the intraday, I'm not saying let's go swing trade NASDAQ stocks right now. Not at all. Not at all. You have Apple, Amazon, you have Facebook, you have major companies reporting that will have an impact on this. And then, even as we get through today, people tomorrow are going to want a throwaway day after this week in the marketplace. And so I don't anticipate a lot of heavy action tomorrow. And then we're talking literally one trading day before the election. So, when you're talking, asking me to look at the NASDAQ, you are seeing internal strength. And if you're looking at day trading, absolutely, you're looking at the NASDAQ on the buy side right now, but that is literally only for a day trade. You're not looking at doing anything from a multiple time frame analysis right now until after the election.
And back on a daily or weekly chart on anything really, I have a couple questions around some of the economic data that came in. I wanted to talk about from both of you guys. I'm going to start with Mark. Mark, you saw the GDP numbers. Matt talked about them earlier. He'll also give us his analysis here shortly on what he's seeing from that. My question is the strong rebound in GDP based on consumer spending that Matt kind of gave me some numbers on before our show here today. Does that make it more sensitive that we get a stimulus package after the election at some point? How does the market interpret that, Mark? Because they're not buying that news up huge here today, and it was a pretty positive report. What's your reaction to the GDP event today, Mark?
Well, everyone knows that that's the GDP numbers. If it weren't for trillions of dollars of stimulus, wouldn't have been there. My cat's tail wants to get in the show today. No, listen. As soon as the election is over and we know what the composition of the three branches, well, not the three branches, but the Senate, House, and presidency are, stimulus is going to become in the background theme that eventually gains steam as the weeks and months go by. So stimulus on the back burner today. I mean, the only news tidbit I had today on stimulus was Pelosi accuses Mnuchin of dragging feet on stimulus compromise. I'm like, come on, Pelosi, we're done with that before.
Well, she actually put an official letter on her website. We can talk about that in just a second. Matt, what about you just on the GDP number? Then we can talk stimulus. Do you think, first of all, what did you see in the GDP number? You referenced it earlier. You're talking about the big rebound based on consumer spending. How do you read this? And does this just make it more sensitive for stimulus for you? Because that's where my instinct is.
Well, I guess it's how you see this number. Do you look at this number politically? Do you see this number economically? Obviously, when you're looking at the headline number, it is a robust, very positive headline number. And I personally am taking the advanced GDP, which is the most important GDP number, right? We get 3 GDP reports. This one's the most important. So I'm looking at this number as a positive. That's number one. I am seeing this number as a positive. But when you look at the detail behind the GDP number, obviously it does go without saying that if a stock goes down 30% and then goes back up 30%, what do we call that technically? We call that a bearish retracement. Because when a market goes down 30%, back up 30%, you're forming a lower high, is what you're doing. Mm-hmm. And so when you actually understand that, it's a positive number, and people will be V-shape, V-shape, V-shape. It's not a V-shape. There's too many very concerning numbers in manufacturing and the labor condition, and I still have very big questions on commercial real estate and specific residential real estate starting into next year But the reality is, I'm seeing this number as a positive number. However, when you look at the detail behind the number, 25% of this growth was based on increasing consumer spending. Now, 68% of the overall GDP number is based on consumer spending. You saw a massive increase in consumer spending in the quarter, and we all know why. It doesn't take a rocket scientist to understand why. We all know why. The why is very simple. Trillions upon trillions of dollars in additional stimulus, both to small businesses, corporations, everything. If you look at it from an overall perspective, just from a economic power perspective, right now we're looking at about a $21.5 trillion economy. We're about $2 trillion underneath that projection when you just look at the GDP. If you discount stimulus, we're about $4 to $5 trillion under the growth we had last year. If you do not include stimulus, guys, that's $4 to $5 trillion. That's 25% of the economic production out of the U.S. economy. If you discount the central bank actions in the last 8 months, the number gets far worse. And so when you're looking at this from an economic perspective, you're saying it's amazing that we saw 33.1%. When you're looking at it from a backward perspective, because that's what GDP does, it tracks backward. It is not a forward projecting economic indicator. It is a backward looking economic indicator. And so when you're looking at this in the back, you're saying, okay, how can we continue this without stimulus? If the economic condition is so dire without trillions of dollars in stimulus, then how can we continue to see advancement in GDP if we don't get, if you now forward project and you no longer have stimulus, are you going to see that same type of growth? And with the rising cases across the US, with the lockdowns going official in Germany and France, with the concern increasing from that perspective, and no stimulus, that number is actually very concerning. And so I do think that number will put additional emphasis on these negotiations post Tuesday. I do think that's what we're going to be focusing on again, because the number's positive. I'm taking the number as a positive, but without further additional stimulus, with what we've seen, this number would be destroyed without the stimulus of the past. Are we going to get that stimulus in the future? That's where I think the conversation is going to be.
Well, and that's why Tuesday is so important in terms of market response and reaction, because what the stimulus will be, how that conversation goes, a lot of it comes with clarity on Tuesday. Mark, you mentioned Speaker Pelosi. She actually put an official statement on her website. So the comments she had towards Mnuchin were not on a phone conference call with him or at the White House or however they've been doing their negotiations recently. It was actually on her website. She says, your responses are critical for our negotiations to continue. And basically she blamed the White House, the administration, for not addressing 7 major areas of disagreement: national virus testing and tracing, funding for state and local governments, school safety measures, childcare funding, tax credits for working families, unemployment insurance, and workplace protections. It sounds like a punt from her, guys, and they'll pick this up later. That was exactly, my first read on this. Mark, do you think it's just one of these things where stimulus, the next 4 days, why would we talk about it? Because we've got to figure out what's going on Tuesday and get clarity from that and then move forward. Where's your head on stimulus?
Well, stimulus last Friday, it marked the end of the algos given two craps about stimulus headlines. They'll pick up again, right? One day, November, December, somewhere along the lines. I mean, it's going to be really, and the theme of stimulus is really going to depend on who's in charge where, right? The Democrats are going to hold the House. We know that for 100% certainty. We don't know the Senate. We don't know the presidency. And so what combination of government is in charge next week? Well, that will form what the stimulus theme is. For example, if we have that blue wave that many have speculated about, where Democrats hold all 3 branches, well, the stimulus theme is going to be very, very pro-stimulus, that the numbers are going to be big. That's what Wall Street is anticipating with that combination of branch. If it is not that combination, it's going to be much interesting back and forth negotiations on some level, and we'll have those endless stimulus headlines for a period at some point in the future if there is not an entirety, the Democrats holding all 3 branches. So I keep saying all 3 branches, and I mean, you know what I mean. House.
I'm saying this as a market participant. I could care less what Nancy Pelosi said about stimulus today.
Yeah. Wake me up when we know who's elected where, Matt. Where my head is.
Quite frankly, I don't care what Donald Trump says about stimulus. I don't care about any politician says about stimulus. I think there's a lot of political messages happening right now. And I think those political messages shockingly change post-election. And so whether we have a Democratic sweep, whether Trump wins the election, whether Trump wins the election with the Democratic Senate and the House, doesn't matter to me. I think we still talk stimulus.
Oh, that round of stimulus headlines, I mean, there will be another theme emerge as soon as the election dust settles.
Yep. And we'll revisit it then. Let's flash you
guys,
commodities here.
I even believe Trump's message that the virus is a nothing burger changes post-election. I do. I think all these political messages from both parties, by the way, all these political messages that are impacting analysis changes post-election.
As they oftentimes
As they always do.
This isn't our first election rodeo, you know. This is
no,
not
it
our
is
first
not.
election rodeo. So
no, it is not. It's going to be an interesting 4 days, but quite frankly, I just want the days to come and go. This is one of those where I just want it over with, but we got to wait it out.
I think you speak about for all Americans right now.
It is what it is. Yeah. Let's flash you commodities real quick here, Matty. And, crude oil, we were talking about the weakness, the pressure that was happening there. Obviously, now we are down here at 35.95.
That's a break of support.
Is that a breakdown? That's the question.
It is. Oh, no, it is. It's just.
Right now it is.
I mean, it is. It's just, what's your confirmation signal? How do you personally trade breakdowns? A lot of clear air to that downside.
Matty, what do you see here?
For me, it depends on the close. Right. A test for me isn't confirmation, but as of right now, this very second, you have to call that a breakdown. I mean, crude's down, close to 4%. There's a little bit of recovery, just recently. I'll break down the intraday here in just 1 second. But as of right now, if you close underneath 36, you have to call that a breakdown. You have to. Now, whether or not we see follow through or not, and how you play it is a different question, but you have to call that confirmation. And on the daily chart, I'm really not going to get impacted on the daily chart, especially not on the Thursday, Friday before an election. I'm not front running here, but for me, the analysis doesn't start on the daily chart. It really, for me, starts on the weekly chart. I think that chart's really, really, really nasty for crude.
It's ugly. I mean, first of all, even if you go back a little bit in time, Matt, the resistance zones that we've been establishing for 6 months were old support floors for years, quite frankly. So we've been hanging out in this consolidation range. Now you got two of the sharpest red candles we've had in a couple of months. Yeah, I see a lot of downside. I see a lot of potential downside here with crude. If that breakdown can confirm, who knows what the price action will actually carry through, but I'm seeing obvious weakness. We're going to have to downgrade that one sharply here this week, most likely tomorrow. Let's keep working through commodities if we can. Gold next, then the dollar. And a little bit of a sell-off yesterday, but now we're kind of holding a little bit back. Matt, give me a read on gold.
Nothing to read.
Not much there. I read a report today. I'm curious what you guys think about something like this. I saw the headline. I wrote it down. I even, thought about bringing it up earlier, but basically that global central banks are selling gold, and they cited Turkey and Uzbekistan as the evidence that gold was being sold by the central banks. I mean, Matt, when I read the headline, it's like central banks are selling gold, but then I look at it and I see Turkey, Uzbekistan, and I'm thinking, well, yeah, those economies have had real problems. How do you?
Listen, nobody cares what Turkey does with gold. Everybody cares what Russia, the U.S., and China does with gold, and they've been acquiring gold. So no, central banks are in gold acquisition mode. They're not dumping gold.
Yeah, that's what I thought. All right, the dollar here, a little bit of a rally
and the
today.
Only reason Turkey would dump gold is because they absolutely have to dump gold.
They had to liquidate.
They have to.
Yeah, they've been in crisis.
Think about it the same way if the market gets dumped on initially. Traders have to margin call on gold to pay off other debt. So same thing happens economically. Turkey gets absolutely destroyed. They got to unload gold. Who wants the Turkish lira?
Nobody right now.
Does anybody want the Turkish lira?
It's been in free.
So if Turkey owes you a debt, and they're like, hey, we'll pay you with Turkish lira. Are you like, yeah, let's do this deal?
Hey, Cody, could you?
They don't even want the Turkish people don't even want the Turkish lira.
Hey, Cody, could you do a 2-minute history on the Turkish lira for me?
No.
Snack time, Mark.
No, no. You don't get a filibuster.
My point is the other country's going to say, no, we don't want it. We want your gold.
We don't.
So yeah, they don't want the Turkish lira. So no, that Turkey dumping gold, Uzbekistan dumping gold, none of that matters to me.
Yeah. The dollar next, if we can, and then a quick peek at Bitcoin. Then I want to talk earnings roundup and go through that. A little bit of a dollar rally, little bump here, Matt. Any change in the chart for you with that break back above the MAs?
No, I still have it neutral.
Broad consolidation over the long term. And then Bitcoin. Nice little relief day here today, guys. You know, it held up nicely, and we pretty much got back almost all of what we sold off on yesterday. Just the relative strength of Bitcoin has been there. Matt, any read on that chart?
Yeah, I mean, yesterday I said, you know, we're going to have that battle between 13,000 and 14,000, and we're having the battle. I did not know the battle was literally going to take place at 13,000. Look at that thing.
To the penny
right
almost.
there. No. The close on that candle, look at the number, 13,000 on the dot. 13,000 on the dot. So, you know, it's in that battle zone. I don't think there's a new trade here yet. But I do anticipate this battle between 13 and 14,000 to be fought for, both from the buyers and the sellers. And I think honestly, the more we consolidate, patience here, Bitcoin, the more we consolidate, the bigger that break's going to be, in my opinion.
Mm-hmm.
I want to touch it here, T, outside of day trading principles. Want to touch it, let it consolidate, let it cook, and let it break.
Well, and I do think it's wise for anybody new to Bitcoin. And Matt, you've done this many, many times over the last couple of weeks and months when you've been analyzing Bitcoin. Look at the long-term charts. The significance of the trend here, obviously, even on the daily, you see the strength in the daily trend. But the significance of the history here at this 14,000 level, these zones, is where we spiked a couple of years ago and kind of faded and failed. And it really put Bitcoin into a downtrend for almost a year after that. Now we've been rallying into it, higher pivot lows, higher pivot highs, momentum increasing, sentiment increasing. I'm in love with what Bitcoin's been doing here the last little bit. Obviously, anybody who owns it would be. So, you know, you got to like these charts in the long term, Matt. Yeah.
Oh, the weekly chart is beautiful on Bitcoin, right? It's absolutely beautiful on Bitcoin, but it also leads to that breakout of 14,000. Whether you're talking swing trading, position trading, or investing at this point, we're all looking at that 14,000 level. Everybody is.
Yep. Yeah, I've been watching it, waiting for it for a long time, actually, for years now. And now here we are back up and we're testing these zones. Think about that, Marky. Crypto nerds have been waiting for this for a long time. You're new to this dance we've been dancing. We remember the blowout top at 20K and the downtrend in the bear markets and back and forth and all that stuff. So there's a lot of history around this zone, you know, so it's going to be interesting to watch it. Let's talk earnings roundup. We had some from last night. I know we've been doing the preview, Apple, Amazon, all those, you know, for tonight, but really we got to get some data and some analysis around the companies that did report. And there were some big companies, Matt. Basically, I'm going to let you run here because there's so many. It's whatever you want to talk about from that perspective. Lead us, you know, down the road.
I mean, isn't it like a massive, huge percentage of S&P companies reporting today? Like 100, I mean, it's just a massive, right?
It's a huge day. Yeah.
Tons. And I'm just going to go through a few that are interesting, in my opinion, to me personally, because when you're looking at a list of 120 S&P companies and just the names goes on and on and on, you kind of got to choose. And especially, I mean, in my opinion, outside of Pinterest today, almost everything is kind of a wait and see approach in terms of and I'm not talking election, I'm talking from an earnings perspective tonight with Apple, Amazon, Google, and Facebook. But let's start with Pinterest here very quickly. We already talked about the numbers, very positive numbers on EPS and on revenue, both healthy beats, especially from an EPS number. Growth 58.2% in terms of growth. Love the overall numbers. Now it's just a wait and see approach. Let's establish, kind of like we saw on Snapchat. Let's see how the market behaves here. You obviously tried to run up earlier in the day on Pinterest after the gap, couldn't hold its head above the water, came down a little bit. That puts the analysis from a gap perspective in that breakaway gap, the runaway gap, or the exhaustion gap. Because of the mixed perspective after the cash open, you kind of got to wait and see. But Pinterest should absolutely be on watch list. It's in our Dirty Sexy Money watch list over there. That is the kind of the, if you like baseball, the tackle 25 is Major League Baseball, right? The dirty sexy money list, that's like AAA. That is companies we like but aren't fundamentally strong, right? We like them, we like their growth potential, but they just don't have the fundamentals for a tackle 25 type position, which is more based on fundamentals and cash flow. Pinterest should absolutely be on a watch list. Let's just, in the very short term, let's see how the market handles this gapping situation, especially with Facebook reporting later on tonight, just here in a few hours from now. Let's take a quick peek at a couple gold stocks very quickly. And before I do that, let's take a look at GDX here. GDX is the gold miners ETF. It's a very, very popular investing vehicle for the gold miners. It's a very popular vehicle for cash flow systems, such as covered calls, naked puts, boomerang type strategies. It's been in a fairly not significant, but fairly structured downtrend. As you can see this trend line, and I'll draw the trend line here. As you can see this there. As you can see that trend line pushing to the downside. You are overextended to the downside a little bit. So now that we have a quick peek at GDX, let's take a look at a couple individual miners within GDX. And AEM here, sitting in neutrality, nothing really to see from a trading perspective. However, I do want to keep an eye on that overhead resistance level right here, not the top of the head, but this overhead resistance level right there at about $85. Now, currently pinging on around $80. I don't see any action here outside of cash flow systems. But if you do break up above 85, there might be something to keep an eye on AEM. Now the numbers on AEM came in at 78 cents a share versus the 68 expectation. They came in at $980 million in revenue with a year-over-year growth of 43.6%. This is a very good report out of AEM, a very good report out of AEM. And that's why I say, even though there's nothing to see here today, because of the overall weakness in GDX, that's keeping AEM down a little bit. But if we do get a little reversal on GDX, this is a company I would look at above $85. A breakout above 85 based on the fundamentals I saw out of the earnings, that looks pretty decent for me. Now, in comparison to AEM's report, you did have the more popular company, Newmont Mining. Now, Newmont Mining is one of the more popular, if not the most popular mining company in the marketplace. Newmont Mining, and if you'll take a quick peek at GDX here, look at GDX, look at the trend on GDX. Now look at Newmont Mining. The exact same thing here, and that's because Newmont Mining is a very important company to GDX. Newmont Mining is a very popular company in terms of the investor class. Is performing very similar to GDX. Now Newmont Mining comes in at 86 cents a share versus the 79 cents expectation. A very similar beat on EPS numbers to AEM. Newmont comes in at 3.2 billion versus the 3.2 billion expectation. The difference between these two right now, and why I think AEM is probably, if you're just looking at these two, I like AEM a little bit more. It's held up against GDX, that's number one, whereas GDX was in a downtrend, AEM was in consolidation. Where Newmont Mining reported 16.8% growth, here's AEM reporting 43.6% growth. Now, when you're looking at those two, Newmont's a great company, love the company, love it for cash flow systems as well. But AEM is in a better condition, in my opinion, in the short term, both fundamentally and from a technical perspective. If gold does recover in the short term, I would keep an eye on AEM. Okay, so couple the analysis with gold finding support, AEM breaking out. I like that pairs type analysis there on those two companies. Let's take a look at Shopify here very quickly. SHOP. Shopify, obviously a very, very important, not important company to the overall broad market, but a very popular trading company, especially early on in the pandemic. Over the course of the last 3 months, it's kind of had a little bit of a Netflix flare, a little bit. Wide range volatility, wide range neutrality. So in terms of Shopify's overall numbers here, came in at $1.13 a share versus expectation of 53 cents. Growth on Shopify, think about this number for a second, 96.5% growth year over year revenue. That is fantastic. Revenue comes in at 767 million versus the 636. The overall raw numbers, very good. Very good raw numbers. What'd the market do?
Nothing. In fact, it's down here
sold.
2.7%.
Yeah, it's sold.
Yeah.
So again, another piece of evidence on positive numbers getting sold in this environment. So again, just kind of fits the theme we've seen. Now, now a lot of people with Spotify here. Spotify reports a negative 68 cents versus the negative 58 cents. Spotify comes in at 2.3 billion versus 2.3 billion expectation. Spotify 17.4% year over year growth. Neither one of these companies, both Spotify and Shopify, would be companies I'd be looking at here. Number one, I do like Shopify's numbers, but I don't like the market reaction to positive numbers right now. They're just not buying it in any capacity. Spotify for me would be a potential breakout candidate above $300. I don't care what it does at 240. I don't care what it does between 240 and 300. It can go neutral, it can go sideways, it can go up, it can go down, it can consolidate, could care less. The only thing I'm looking at Spotify at this point is if we do get a market recovery and the market starts embracing a positive theme, whether that's post-election, type themes, or whether that's, COVID data themes, or whether that's economy reopening up themes, or the most likely one is stimulus themes. Regardless of the theme it starts adopting post-election, I do like $300 here on Spotify if we can break up above it. If it doesn't, nothing to see here on Shopify and Spotify 300. Now, Comcast, on the other hand, let's take a look at Tim's favorite company in the market, CMCSA. Comcast all over the board. Comcast for 65 cents versus 51 cents on the expectation. 25.5 billion versus 24.6 billion on the expectation. Revenue came in at 4.8% year over year. Nothing really to see here on Comcast from a trading or an investing standpoint as well. And Tim, those are really the earnings numbers I wanted to look at. The ones that are very, very interesting to me today are the Pinterest report. I thought that was a legit report with a legit movement. And then on the gold analysis between Newmont and AEM, a little bit better fundamentals right now than Newmont, and the space in GDX also in a better technical and a trend condition. So those two are the ones that really do interest me today. But again, everybody's waiting on tonight. Apple, Facebook, Google, Amazon, and a plethora of other important reports here tonight. I'm looking at Activision. That to me has been, Activision, tackle 25 stock Activision, a company people really, really like in Activision, has been neutral for the course of the last 3 to 4 months, very similar to what was seen in Netflix, Spotify, Shopify, and whatnot. But can Activision capture that momentum again that it had from March and throughout all of August, when it went from $50 all the way up to 87? Can it recapture that? It would start with tonight and perhaps a breakout tomorrow. We'll see it.
Marky, any other companies that had earnings that grabbed your attention you want to talk about? The only one outside of that, Matt, I had was Ford Motor, and Ford, just maybe it's my dad, driving the old Ford truck all the time. I always just like Ford. I've always had an affinity towards it. I know I don't want to start a Ford GM debate. Believe me, that is the least thing I want to talk about today. But stock actually did pretty well here, from an earnings report perspective, Matt. They had adjusted EPS at 65 cents ahead of the 19-cent estimate. They came in with the revenue above forecast. Stock is developing a little bit of an uptrend here, in terms of that regard. I don't know if there is a trade here outside of a breakout above the pivot, but I did see it as a positive report. We have seen GM here recently has been pretty positive as well. The automotive industry has been cooking a little bit, developing an uptrend. Any interest in Ford out of either one of you guys?
A little bit on a break, but
a little bit of a
it is.
breakout.
It is Ford.
It might
I have
just
a
be.
naked put on Ford. I'll probably continue to sell naked put on Ford in the foreseeable future.
All right, Marky, you're up next. Were there any companies that grabbed your
They were
interest
all
from an
kind
earnings?
of. Let's go to Canadian beer, right? Molson Coors, Tap.
Tap.
I think TAP. Bottom of the chart. The earnings report is really good. Listen, revenue is down 2%. There are a lot of other companies where the revenue was down even more in the consumer staple space, but the companies at the top of the chart getting beat up with COVID. One of the underreported things with beer companies is that beer companies have really suffered on COVID headlines, right? You know, people not going to events, people not going to restaurants, people not going to bars. So COVID headlines really weigh on beer. I love the report, but that is a potential breakout candidate in a COVID situation. It was a decent report. If it ever dipped really low, I'd definitely be buying some for a long term because they still made money. $1.62 a share. I mean, it was actually a really good earnings report, but beer is susceptible to the COVID headlines. Let's go to our friends at Penn National
Stay on beer for a second here, because Tap is obviously a very different condition than Budweiser. I did see that Budweiser was also, they had their earnings report a little bit different condition. Mark, you've talked about Bud in the past that you had interest in it. Are you now kind of pivoting towards Tap?
I talked about a breakdown of Tap.
The other side of it, breakdown.
Yeah, I mean, listen, you can't ignore that chart, right? From a trend perspective, people hate this company.
Well, that's my question, Mark. I mean, you talk about a big dip on Tap. What does that represent, since Tap's been big dipping for years now?
There's a point as like somebody that looks at really cheap stuff, and when you look at a company that can make money, and if it keeps getting hammered, which it very well could, if COVID headlines continue to hit, Tap is going to break that support level and be a decent short-term bearish trade candidate. But like at some point, you just can't ignore it from an investing standpoint. Budweiser has been my preferred candidate in this stretch versus the two, because I like the fundamentals long-term a little bit better. But I love both beer companies as much as any company out there. Once we get over COVID, I think both companies are going to appreciate tremendously once COVID is done. So,
okay.
But our friends at Penn National Gaming,
I saw this one too. Yeah.
You know, Penn National Gaming, little beat on revenue, turned a profit. Was a little surprised at that they turned a profit. Revenue still down, minus 16% year over year. But this is the one thing that we've seen a lot of companies. Darden Restaurants really is the standout in the whole group. That companies that beat up on revenue, but able to turn a profit, obviously through cost-cutting measures. Healthy beat on, on the earnings aspect. Revenue still down as casinos. Penn, obviously the home of Dave Portnoy, but they still own a lot of casino properties, which shows to the thing, but pretty muted response on the earnings. Both DraftKings and Penn both in short-term downtrends right now. Any interest in Penn National Gaming, and where?
No, as a matter of fact, I probably have the opposite in the short term. It's going to come back to the same analysis. I was looking at this one this morning, Mark, and my first reaction as I went through the numbers, I'm like, these numbers are okay. They're fine. They had, over $1 billion in revenue, but it's not $9 billion company. It's still a very highly, overvalued company in that perspective. This is a momentum sentiment trade. And when it had the momentum and sentiment in like July, August, and September, it was a beautiful runner. But now, Mark, you look at this, you had the initial gap up. And what did the market respond to almost instantly? They faded that news, Yeah. So, and it's the hesitation I have around earnings in general around companies like this right now. When the charts are blown up, you got to have a Pinterest-like quarter to just break that thing all the way to the outside. And like Penn, yeah, it had a 5% day running here today, Matt. It's given all of it back almost right now. So in the short term, I would be very, very hesitant and cautious around companies that have rolled over, their pivots have changed, their patterns have changed. And now you're post earnings with a lot of uncertainty. I'd be very cautious here.
It's an ugly chart, right?
Yeah.
I have zero interest in Penn National Gaming right now. It is a pure momentum play, and you should not be looking at a value analysis on it in any capacity.
Yep.
Well, like $15, it's value.
15
Depends on how you see value, I suppose.
You know, Matt and I will probably.
Value is an extremely subjective analysis.
It is an extremely subjective analysis, isn't it?
Yes.
Yum Brands, Taco Bell, home of Taco Bell, KFC, and Pizza Hut. Came in at 92 cents, slight beat. Now, here, I'm going to play a little quiz with both of you. So, KFC, Pizza Hut, Taco Bell, which two went down comparable sales in the quarter and which one saw an increase?
Okay, what's the four?
The three.
Three.
So,
Okay.
Yum Brands owns KFC, some delicious chicken, Taco Bell, home of the nacho fries, which please bring them back, and Pizza Hut.
Taco Bell, KFC down, Pizza Hut up. That's my guess.
I'm going to go the other way. I'm going to say Taco Bell because people are out doing more. School's back in session. Maybe people are driving. It's got the drive-through. Give me the Taco Bell up and the other two down. Pizza Hut has had a downtrend a long time. I'd be surprised if that was the brand.
Matt, I guess.
Cody said what one was up?
Pizza Hut. Tim said Taco Bell.
All right. I don't think it's KFC, but I'll go KFC. Just go off.
It was Taco Bell, and it's an interesting trend in fast food, which is a space I follow very closely. The national restaurant chain, there's a lot of data. One of the reasons I love restaurants is there's a lot of data that comes out every week, every month. So, like, you don't necessarily need earnings to get a big picture of what's going on. Last couple of weeks, we've seen a huge decrease in the amount of dine-in diners. COVID concerns, perhaps, you never know the exact causation, but in dining restaurant, big decreases in recent weeks. McDonald's, Taco Bell, your drive-ins, we're seeing a sizable spike in drive-in, anything with a drive-in. And one of the things that we saw, like if COVID were to hit, I mean, the one nice thing, and I hate using that word in relation to COVID, but if we go through this cycle again, one of the things that we learned is anything with a drive-through did pretty decent. And they continue to do decent. Numbers actually up and healthy like you would see in a growth type environment. So Taco Bell doing very well with Yum. The other two brands so-so, but those drive-ins are doing really well with the numbers. The cheesecake factories, the things where you sit down, not as well in this in these last few weeks. So Yum Brands, boring stock, rarely trends, but I mean, that's not exactly a momentum trader's dream chart over the last 6 months, is it?
No. Yum Brands. I can't remember the last time I traded on it.
Yeah. Yum just got more highlights in the halftime report than it has in like years.
You know, bring up Yum C next, Matt, because I want to analyze the data on China. We can give it double the focus.
Fast food. That's the only thing.
I love listen, it's a space I know. It's a space I can speak very, very intelligently on. And if Yum Brands dips into the mid 80s, it's an absolute buy in.
I do want to point something out real quick though. I was the one who got that right.
The what?
I said Taco Bell, and Taco Bell was the answer.
It was Taco Bell.
Okay, so
have you guys ever had their nacho fries?
I was going to say Taco Bell. I took KFC because of them.
I've not been to a Taco Bell.
Fries were the greatest thing they ever
probably 10 years, maybe. I don't know,
They're
5
all
years.
Terrible. What are you guys talking about?
Nacho fries you've never had nacho fries. Nacho
yes,
fries
I have.
are delicious.
Everything at all three of those restaurants is terrible.
No, Matt, you're wrong.
Once again, if value investing is subjective, fast food is absolutely subjective.
100%. That is true.
Last earnings one I have, Overstock.com, which has been, if you followed Overstock over the last 3-4 years, it is an absolute wild child. As high as 120, as low as 13, and it goes.
What's Overstock symbol?
OSTK.
It's on your 100, isn't it?
Oh, absolutely. It's a
He's
wild
got some weird
child.
stuff on his 100.
I do. Revenue, 110% year over year beat. And if you want Overstock, this is one of the reasons I love Overstock. I love day trading, love swing trading. I like doing all kinds of stuff with Overstock because it can move Look at that range. You need to come up with a new candle name, like there's the inside candle, the engulf. That's, I don't know what that is.
So you have the bearish engulfing. That's like a Godzilla type engulfing candle.
I mean, you need a new name to describe that candle.
But this is what I'm talking about. The responses, even when it tried to be positive, you saw the same thing on Penn. You saw the same thing on Overstock. It was a momentum stock back in the summer.
Matt has been talking about for 10 days now. It is the response to earnings, and on some of these below the radar things, Penn, Overstock, that have a wide following. I mean, Overstock has a lot of shares traded every day, right? They have a wide following, but not the headline names. You have seen that sell off today. They tried so hard, right?
They did, yeah.
I mean, 112% revenue growth, and you're going to break down here.
Yeah.
I mean, both Penn and Overstock had the type of earnings report that in other markets would stabilize the company, and instead you're looking at potential bearish breakdowns. Same with TAP. A reasonable report, and you're looking at a bearish breakdown on all of these companies. Last one I had on an upgrade, UPS, which is an area of the market that a lot of people like, including me, been very volatile with the market, right? Both FedEx and UPS the last few days. UPS remains goes to a high conviction pick at Credit Suisse. I mean, these are two areas. I mean, FedEx and UPS, if the market were to spin out of control for whatever reason and everything gets thrown out with the bathwater, there could be some interesting momentum trades 3-4 weeks from now on UPS and FedEx as they form a nice little pattern. So I would definitely keep those two companies on your watch list still.
Love it. Thanks for the roundup there, my friend. All right, guys. That's all I've got here from, a show perspective. Obviously, my main focus here today is going to be tonight's earnings reports. I'm going to be watching them like a hawk. We're going to be meeting. I believe we have another meeting going on, but as coaches, I'm sure we'll be talking about those earnings responses, reactions, throughout the next 24-hour cycle and having discussions about it. Matt, we're going to have some tough decisions to make tomorrow with our rankings as well. Obviously, we got half a day of price action today, some price action tomorrow. But these charts have been a change in here this week.
The scanner reports will probably be a little light this week.
Yep.
Yeah, no doubt. But that's fine. There's nothing wrong with that. No, we have a meeting today with our coaches at 2:00. It's right after the market closes. And, that meeting usually is about an hour-long meeting. And Tim, I'm willing to bet 90% of it is us just talking about what happened on Apple, Google, Facebook, and the likes, Activision, so on and so forth. And
let me let you in on some insight. I got to tell you something real quick.
Go ahead.
So I've already planned it. My first 10 minutes, I'm going to get everything I have to get out there.
Yeah,
bang, 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 bang.
Good.
Because I know the second those numbers start popping, I'm like, okay, listen, my meeting's getting derailed.
Hold on. You have from 2:00 to 2:05. Okay. And we all know what happens at 2:00. People start trickling in at 2:01, 2:02, 2:04. Where you know what's going to happen at 1:58. 1:58, we're going to get the Slack message from Gino. Hey, I got to make a few trades, hedging some stuff. I'll be on at 2:05. And we're finally going to get all the coaches there at 2:05. And then Tim, you're going to be like, hey guys, you ready to start the meeting? Let's have a conversation. Let's talk. And I guarantee you the only thing that's going to happen for 30 straight minutes is us talking about those reports. And the whole time Tim's going to be like, hey guys, can we get back to the agenda? And I'll be like, yeah, guys, can you get focused? And then I'll be like, hey, but what did you guys think about Apple on this specific thing? Yeah, I feel bad for you today.
It really is going to be hard because my Feedly, I have it I don't know what you guys do for your news service. I use Feedly. It's a little I don't know what I mean.
I don't use a news service.
And so where you can just custom make yours. My eyes are going to be glued because this is a huge piece of the short-term sentiment puzzle, right? What is the initial market response? How does the earnings come in? I mean, it's a huge piece of this short-term puzzle. And so, yeah, it's going to be I have my auto responses to you already planned out, Tim.
Mm-hmm. It'll be fun. I'll be efficient. We'll get it down, but I guarantee we're going to be talking for quite some time about the market response to these things. And what I'm really going to be interested in, Matt, is the initial algo response relative to the conference call responses because of what we saw with Microsoft earlier in the week. But obviously, we'll break all this down tomorrow during our show. We got Frank coming in tomorrow. Final thoughts here. Marky, you first.
Listen, I mean, it is a good chance that all of you are just with me. You got this election 5 days. You got big earnings tonight. There's a lot of puzzle pieces that are going to fill themselves out. I personally, y'all can do what you want, as I like to say, but I'm just being conservative the next few days, not doing anything really with existing positions. I have them where I want. Not really going to add anything new. I'm just going to see how these plays. This little dramatic piece of the stock market history plays out. And so, but I'm a risk off kind of guy.
Mm-hmm. Maddie, final thoughts from you, sir?
Oh, I'm just typing in the chat.
I saw you. You love getting into the chat and discussing things with our team. I think it's your favorite part of coming to the show, I believe, is the team tackle conversations.
I do like the chat.
Yeah.
I do like the chat. I love the chat last couple of days. I mean, people talking about, trades or investments or, how they're approaching the election. And that's what I love about community. And I love being a part of the community. I love diving in and communicating. And so I love the chat. I do. I don't love when the chat gets political. Sometimes I see too many political opinions instead of market analysis, but I do love the chat, no doubt. Team Tackle is the best. I love it. I love coming here on a daily basis. I love communicating with them on a daily basis. And the simple reality is there is some really, really good traders in tackle trading. Oh, yeah. Some really good traders with spot on analysis. And so I like hearing their opinions and sometimes I agree, sometimes I disagree, but I love the conversations on it. I just love it.
Yeah. Yeah. And I've enjoyed the chat here recently as well, guys, focused on positivity and conversations, the way that you guys are interacting with each other. It's been great in that regard. Hashtag Team Tackle is our official hashtag because it is about community and team. We appreciate you guys more than you know, and always going to be there for you and putting our work in to make sure that you guys are best prepared to go out there and make the best decisions you can. That's it for our show here today. By the way, if you missed last night's webinar, Coach Tyler Craig is right on our YouTube channel. Go back and watch the replay, how to prepare for earnings reports. You got about 2 hours before these big events here tonight. Go watch that replay and have a better understanding when you're watching these stocks going up and down as to why they did what they did and so on and so forth. Tomorrow during the show, we'll analyze all of it. It's going to be a fun, action-packed show tomorrow. Make sure you come back and attend that live. And guys, just have a wonderful rest of your Thursday. If you are a member, and we appreciate you. If you ever need anything, team@tackletrading.com. If you're not yet a pro member, there is a 15-day trial of our services, our pro services in every one of our YouTube videos down in the description. Just click that. Come and join us, see what we're all about. We know that you're going to love it. Tonight, there's a cash flow club, I believe, with Gino. Mark, is that right?
Indeed, the great Gino Poor.
The great Gino
is
Poor.
On cash flow tonight.
Yeah.
And Gino, one of the things I love about tackle trading, and if you're not a pro member, give us a try. Sign up for a trial. Go to the store page at Tackle Trading. Is that we have so many different experienced traders with so many different approaches to the market that it's really likely that you're going to find someone that resonates with you and how you would like to approach the market. Absolutely. And Gino is definitely his own flavor of Kool-Aid. So check him out tonight. Cash flow.
Gino. All right, guys, that's it for today. We are done. We will be back tomorrow, same time, same station. Stay safe, stay positive, get out there and do some good. We'll see you guys tomorrow.